Hello guys, welcome to this full tutorial and basically the course under which we trade these concepts. So in this particular course you're going to understand how we look for this step 1 and then option 2 in details, and then we talk about psychology, we talk about risk management, we talk about everything that is involving this particular strategy, as you can see here. So I'll walk you through step 1, which is checking daily time frame and know the overall market direction strictly for risk to reward only, and then you will proceed to either options for entry. And what are the options? Option 1 is how you should switch to 4 hours and check liquidity rate or week off, and then shift to 15 minutes and get entries at 15 minutes double close in our direction. Now option 2 is you don't find rates, that is no rates in step 4 in this option 1. You shift to 1 hour and check liquidity rate or week offs and shift to 5 minutes, wait for double close in our direction and take entries. All these are covered in this particular course in details and with several examples, not just one example, several of them. So you sit back, relax, and you take your pen. You will enjoy this thing. By the time you're done here, you shall have understood how we take these trades. Now again, I will also discuss about this, how you place pips, that is SL, few pips above or below the 15 minutes or 5 minutes double close in your direction. That one is also covered in this course. And then take profit and risk management, we talk about looking for at least 1 to 4 risk to reward and why we do that. And then how we BE, by the way, that is also covered in this particular course. So when you see break of structure in 15 minutes and 5 minutes, you should be going break even. All those are explained in detail. Again, on the psychology part, which we are very strong on, that is the 10 trade rules. If analysis is right, it will always play out. The expectation should be a loss, while a win is just a favor. So don't turn favors to right. I started with explaining this particular psychology concept in this particular course, how we trade this entire thing. So make sure that you watch, and then after you are done watching, you take notes, you go and practice. Everything is explained, nothing is left untouched. It was a discussion group or a class from selected friend of mine. I wouldn't call them mentees. They are friend of mine. We select from the people who are serious in this group. So once you're done once you're done with watching this video, you can still come and join this group. And first of all, this is the outline that you need to know. If you're still young in SMC, this is what you need to know to understand liquidity and true SMC course. You need to understand all this. You can pause this video and read through them. This is the basics that you need to understand as an SMC trader. Once you understand all this, then you can go to the trade to the trading strategy. Now the trading strategy is based on these two things. Now if you still don't get enough, the only thing we don't discuss there in this course is this is this particular point here. This particular swing option, this is what we did not discuss yesterday. But everything to do with the entry, you will find there everything. Now once you are done there, you can join this group, and when you type anything on the comment section like this, you will be directed to this group. Once you are directed to this group, you will be able to join the people here who are people whom we trade with together. So this group is strictly meant for people who are serious. We don't require jokers. So if you are a joker, we don't need you. You can see here, this is one of the people whom you are going to hear them from the discussion group. So this is a trade that is saying we missed. This was 1 to 10 risk to reward trade of AUD NZD. So people share here a lot of trades. There's another one we missed here on GJ that is already running for a 1 to 7. So there are so many people giving trade entries here. Once you're done with the thing, you join and get to learn from us too here. So another thing is anything that you hear that looks like a joke in the discussion, please know that it is for entertainment purposes, and do not take them seriously, because we were having fun in the discussion group with my friends. So it is a very detailed course, and sometimes you may feel like I'm having a dialogue. Yes, because it is a recorded course. So make sure that you give it that option, that room to understand that it was a recorded course and was not planned to be uploaded, but I felt nice to upload it. Now once you are serious in this group, I'll be selecting you randomly, like I've done here with these people, to join classes that happens weekend. So we only select people who are serious and responding to questions, and people are taking part. If you're not serious, we're not going to select you. As you can see, there are so many people here. We don't need so many people. Of course, if you're serious, we need you, but if you're not serious, we don't need you at all. So we are not going to select you into our small group where we discuss this thing. So enjoy the process. To go about ProFarm, that I've come to realize currently is simple. I think if you are starting out as an SMC trader, we all know that SMC have got very good risk to reward. So I would suggest that when you get a counter, let's say you have a new account. If you have a new account, I suggest that if it's new, let's say you have 10k, this is always my preferred to start with, 10k challenge. So it goes for the 2 steps one. That is what we can comfortably afford several times. If you have money, then you can go for bigger one. It depends with your taste, but I prefer this one for every beginner. So if this is what you have, I prefer that your first trade should be having 0.5 as the risk, 0.5% of that account, which should be around 50 USD. That is what you should go with at start. The goal is very simple, so that if you take 2 to 3 trades or 4 trades or 5 trades, you need to target at least 3%, or it depends on your risk appetite and how fast you want to complete it. Then you target 2 to 3%. Then after this, subsequent trades you should try out maybe 0.8 to 1%, so that you can pass it quicker. 0.8 to 1%. So this, if you're trading with let's say an average of, now people ask me why I choose 1 to 4 as a risk to reward. People ask me a lot, but as my preferred risk to reward. The reason why I choose this is because I normally don't mind taking 3R. 3R is all good. We can all agree that 3R is very, very good. The problem with 3R, targeting 3R sharp, is this: you have spreads that are not going to tag you at the right place you want. At the same time, you have commissions that you need to pay. Now, if you are now holding even trades, the commission become ridiculous, and therefore, if you are risking 50 USD to target 150 USD, most probably you're not going to get this. You're going to get around 120 or 130 USD. But you see, on your side, you've recorded that you are getting a risk to reward over 1 to 3. But in real sense, this is not 1 to 3. So even if you're playing with the 10 trade rules, you are still going to have to win at least 4 times, not 3 times, because with the 10 trade rules, you only need 2 wins to be break even. I'll demonstrate that after I'm done with this thing. So that is why I prefer to risk and target 1 to 4. And if I get 3.5, I comfortably take. If I'm seeing that maybe I should just leave this market, or it is not reacting nicely the way I wanted. Let's say I don't see big candles in my direction, it means that we are developing liquidity. If you see a market being choppy, market developing higher highs, higher lows in 15 minutes and 5 minutes, just know that that is recipe for big movement in the opposite direction. So with that in mind, if you manage to get a candle that can take you to 3.54 hour, leave the market. I think that should be, yeah. Let's see. So if you see such kind of candle, that is why I prefer to target. If I reach 50, I prefer to target 200 USD. So even if I get 180, I don't mind. If I get 170, I don't mind. I am still way above the 10 trade rules. So once you can manage to get 1 to 4 risk to reward, and then you take 2 to 3 trades at the start, you reach 2 to 3%. Now you can subsequently increase your risk to 0.8% to 1% maximum. As an SMC trader, you should never go beyond 1%, unless now you want to blow that account. Let's say in future, now when we are all good, you want to blow that account, so you can always risk 2% and target maybe you just want to maximize, because already you've had like 3 to 4, 5, 6, 7 payout. You don't mind, you should risk, but as an SMC trader, don't go beyond 1%. With this, our kind of personal, I like tight stop losses. Now let's say that you are in drawdown. Now, like I said, when you start with the 0.5 max. Now do not change 0.5 max provided you are going into drawdown. I don't know if that makes sense. If you happen to go in a drawdown, when in drawdown, from my own experience, if you don't want to blow account, this is something that happened to me. In some account I bought, some 5k account I bought on funding pips, and I quickly blew it because how much I was experimenting that kind of risk protocol. So that day, and then with this my poor habit of not checking whether there is news or not, I ended up blowing the account very quickly within the same week, because news came in, and then now I was in drawdown like 3%. I risked 1%, news came in and flashed me into 3%, and then I lost the morale because it's even a small account. So I lost the morale in it, and then quickly went into risking 1, sometimes 1.3, 1.4, and that is how I blew the account finally. Of course, I was able to bring it sometimes back, and then now I just blew it. So from my experience is do not risk more than 0.5% if you are in drawdown. Some people will say that, oh, until you reach 3%. Just know that when you reach 3%, there's an account that I played with for some time. It's currently in serious drawdown. I've never even thought of recovering. It is from Alpha Capital. That is the account that I've experimented with so many strategies from other people that I learned with. The mentorships I used to buy, I used to take with that one account. But the good thing is that I used to risk 0.5. You can imagine how taking mentorship from other people, and I used to pay them good amount of money, led me into heavy drawdown. So I used it as a learning. I can say I used it as learning. I think I'm down like 8%, about 8% or even 9%, I'm not sure, but I decided not to trade it, because I concluded that by the time I want to trade it, maybe I can just blow it, take one trade and blow it, and then get a discount, because when you blow an account, most probably you're going to be given a discount so that you can join in. That is why I've not blown it. Now if you are in drawdown, never go beyond 0.5. if you go 0.5, just know that psychology is now messed up, and therefore you are most likely going to blow the account. So that is something that I really want to bring to your attention, that do not go below 0.5. It's something that has happened to me. Another thing that you guys need to know is, if let's say let's get to 5 minutes. Let's say you got 5 minutes, and then this would be a very good example. Now this is the trade I took. So let's say this was your initial entry. When this closed, you got some initial entry here, some tight stop loss there of, let's say, 18 pip stop loss, targeting the same thing. All these things I'm telling you is something that I've learned the hard way. You have to just learn the hard way to stop making those mistakes. So in this case, your entry was okay, but it was a little bit early, or you had a too tight stop loss. So let's say you were lucky to have used 20 pips stop loss, 21 pips stop loss on this GJ trade. You wouldn't have been stopped out. So probably you would have gone to your 1 2, maybe you're targeting 1 to 3 or 1 to 2, or this would have just come back to break even, or when you see it being weakening again here, you should have left. So with that, you survived. But somebody like me, I'll just put my stop loss here, because according to my analysis, I shouldn't, this place shouldn't be wicked. So if I'm wicked, when I see price coming with this momentum, I don't mind, because I know that with this momentum it can still go down. So what you should never do, that I did at some point and I lost 2% in one account, is that I used to increase my stop loss, and then it comes, I increase, I see it's about to start reversing, then I increase, then I increase. Don't forget that I had 17 pip stop loss. Now if I risk it here, I've just doubled my stop loss, and when it reaches this point, just know that it is going to stop you out eventually. So it comes here, stops you out, and then now starts tanking again. Don't do that mistake, please. It is going to cost you abundantly. If your stop loss is here, very tight, leave it there. If you are wicked again, you rather take that 1% and add another trade. Stop loss here. You can see that this is now 11 pip stop loss. So which one is better? To get an 11 pip stop loss and go again and take nearly a 1 to 6 risk to reward, like the one I took was just slightly shy of 1.4, because I took it right here. Yeah, it was right there when that candle closed, and I had very tight pip stop loss. I think I placed 14 pip stop loss, and then actually I was trailing my stop loss, but when I was talking to someone, and I'd not known what was happening here, because I left it when it was here. So I thought we need to get some pullback, and then we push down. So my take profit was somewhere here. So when I was talking to someone, I knew that we would get a pullback, and then I just keep trailing my SL, because I was targeting somewhere here. I was somewhere here for some 1 to 4 point something there. So when I came back, I just realized that it had already closed for some 1 to I think around 3.8 pip stop loss, 3.8 risk to reward. So that is something that I've learned the hard way. Please do not do that. If somebody is hearing me, do not trail your SL. Let it hit you out and then go again. Then if you are hit by a stop loss, it doesn't mean that you are wrong. It only means that you could be liquidity. And if the trade idea is wrong, we would have seen this thing just keep moving upward. That means that the trade idea is wrong. But if you get a week like this, and then market starts going back in the direction, in most occasions, if I'm very wrong, you could prove me wrong. In most occasions, you will see that you are hit with a stop loss, and then the market goes in your direction without you, and they're just there watching and cursing the market. Like, I would have just increased my stop loss a little bit, I would be in this trade. So to cover that, I opted to always just let it give me another entry, and then I go again. So that is something that I wanted to tell you. So on this risk management, unless somebody has a question, this is what I strongly advise. Then with the time, just remember this, with the time when all of us are super good and we are doing well, you've gotten multiple payout on a prop firm, you are now risk free from it. You can go now with the 10 trade rules. So what does the 10 trade rule says? The 10 trade rule says that from the first time you get a challenge, just try and pick very high quality setups that are obeying the checklist. So you take 10 trades in a row. The 10 trade rule that you just check your percentage win rate. Now let's say that you have a 30% win rate with this strategy. With 30% win rate, it means that you will have to have, you are only likely to have 3 winners and 7 losers. Now with these 10 trade rules, it should confidently tell you that if you only stick to taking at least a 1 to 4 RR, which may not be this case, but in most occasions that is what we are going to target for. So if you target just a 1 to 4 or just slightly anything above, I'm using 1 to 4, but anything above 1 to 3, so that you are sure you get that 3R. It means that how much is going to be your return on reinvestment. You are risking let's say you are risking $1 to get $4. So if you are getting 3 winners, it means that you shall have brought in 4 R's 3 times. That is the winners. So that would be that multiplied by 4R, the 4R you've brought in, multiplied by, and by the way, if I'm doing pro trend, my target is always 1 to 6, and currently with the refined strategy, you can comfortably get those ones. Like Celeste, you can confirm that the other gold trade was more than 1 to 4. Do you remember it?
Yes, the one on Friday.
Yes, yes, it was more than 1 to 4, right? Yeah. And possibly it is still going to tank. Now, do you remember that GBP trade we shared too in the evening?
Yeah.
That one actually went for a 1 to 20 plus, and it is still moving. Yeah, I was supposed to shoot a video on it, but I didn't want to shoot a video and upload before we come to this discussion because I'll confuse you further. So I wanted to have this discussion first, and then that is when we can now proceed to, if you watch videos, you know that I'm watching video with these expectations. First of all, by the way, YouTube does not pay me, so that is why sometimes I choose to produce video at my own pace. The only thing that I enjoy is when I see that people are watching, or people are liking my video. It means that this skull could be giving something important. That is the only part of it that I enjoy. So sometimes I just choose not to upload for the sake of not bringing confusion. So I felt like if I shoot another, that is why you see my last video was uploaded 5 days ago. I felt like if I shoot the trades we've been making without this discussion, the people who matter to me the most, you guys, you that are here, you're really going to get confused still, because it will be a nice video to watch, but you still don't get the whole concept. So that is why I delayed. So from tomorrow I'll start shooting all these trades we've taken, or any trade we've discussed. And then another thing, I don't like shooting videos on trades that we've not taken. I don't like that. It is rather we shoot videos on trades we've taken, because at least those ones proved that we are doing something. Even if I don't take it myself, but if one of the members take it, I'm comfortable to shoot, because that is how I prefer, just my style. So out of this 4 risk to reward trade, you got it 3 times. So that means your total risk to reward is about 12. It could be 10. There's no problem. But then you lost 7R. Let's say you lost 7R out of 10 trades. And most probably you're going to get so many break-even that losses in this kind of strategy. And if you are very keen, maybe later you can confirm, because at least you understand better. It is very quick to break even this. That sometimes we just hold ourselves, but let me not break even immediately.
Yeah, I've noticed that you can break even quickly.
Yes.
But again, it comes down to, I think, your discipline. If you want to hold, then you hold. But so how I trade, because I have a platform account, if I am already up in profit, then in a case like that, I will hold the trade and not set break even, and see how it plays out, because I can afford to risk the loss if it does come back and it takes me out. But if I'm not in profit, then I'd rather go break even.
Yeah, it makes sense. It makes sense. So personally, I always don't like immediate break even.
Yeah.
If you do immediate break even and it comes back, weeks you out, now you are kind of confused, because now maybe it is moving rapidly that you can't get any entry, and if you get entry, you're going to have a relatively lower stop loss than the one you had. So you rather place half a stop loss. That is what I encourage people. Provided you have safe stop loss, you can do what is called half stop loss, meaning that you break even but half. You don't become too much attached to the money you've already decided to lose to the market. Anytime you take a trade, you've already decided that that $50, that $10, that $200, depending on your account, is already a loss. So don't be too much quick to break even, because with SMC, you know very well that the market can always pull back. Obviously, we don't like market pulling back. It pisses me off when I see market pulling back closely. And it immediately tells me that my direction could be wrong, and most occasions it is not even true. But it is just the mind. We are not accustomed. Human beings are not accustomed to be losing. So I advise that whoever is listening to me right now, try and go half break even when we get a first break of structure, major break of structure in our direction. And then when we get second break of structure, you can now go full break even, but not exactly at your entry. Just let the market to take some few coins from you. It will not hurt. Just letting the market, if you are risking $50, just letting the market take $10 from you in the name of break even, that is your school fees. What is wrong with you? You don't want to pay anything. Anyway, it's being ridiculous. The thing is, avoid getting to break even exactly the same entry you took. Just try and avoid. So if you have the first break even is break of structure, you see a major break of structure, go half break even. Then you see now second break of structure. Now you can go to full break even if you deem fit, especially if you are in heavy drawdown. But if you're not in heavy drawdown, don't be so greedy. No, is it greedy really? No, that is being selfish. If you can't let the market take $10 when you are wrong, but you want to take $200, does that make sense? That is so unfair. So guys, don't go full break even all the time. Just be reasonable and give something to the market. It won't hurt. So when you have this, your total risk to reward will be around $12. So if you take 10 trades and you get 7 losses in a row, of course something is wrong with you. You keep losing 1%, or 0.57 times, or not even 7 times. Like all the time, you keep letting the market take your break even. The way the strategy is currently developed with quick break even protocol, don't let it like that. Take half a loss. Half a loss is not even accounted for here. We are accounting for all the losses. So once you're done with 10 trades, you'll realize that out of these 7, maybe 3 will be break even, 4 will be losses. And in that case, if you are having 4 losses, you wouldn't be subtracting here 7. You would be subtracting 4. And then you realize that you're already 8%. So if you're risking 0.5, you are now 4%. So now you come and apply this other principle of risking nearly 1%. 0.9, it's okay. If you get 0.9 and you get a one trade that goes for 1 to 4, you've already passed the challenge. Then now, when you now reach phase 2, what you need to do is very simple. From my experience is I think it would be best if you just let me just start another one. It would be best if you risk, you start with always start with 0.5, so that you cut that excitement momentum. You need to cut that excitement. That excitement is going to is what is causing people to lose most accounts. So just start with 0.5. Luckily, you get a 1 to 4 risk to reward trade, or even a 1 to 5. Let's say you are getting a pro trend trade. You look for 1 to 6. You're already up 3%, or even 2% if you are reaching 0.5. And then from this, now you just need another. You can still stick to 0.5, or you can go to maximum of 0.8. Now, anytime you are back to drawdown, you are back to 0.5. Now, I think that is good risk management. Now, when you get the account, because I'm telling you from all these other experiments I've had, and they do not work well for me as an SMC trader who you are expecting about 7 losses in a row. Now, at funded stage, you are looking to risk maximum of 0.5. There's nothing like if you are gaining this or you are gaining that, now change that to this. No, just risk 0.5. 1%, look for your payout, and then from that henceforth now just be risking 0.5 until a point where we will all be balling. Now you can shift gears and now go back to the 10 trade rules and maximize. If you are risking 1% according to these 10 trade rules and you are now funded fully, you will be returning home at least more than 1 to 10 risk to reward every single month, actually every single 2 weeks, because most of these payouts are in 2 weeks, because you will be having at least 3 winners. At least 3 winners you'll be having. That means that you'll be returning home at least 8% or 10%. So this is the risk management I ask you guys to try and obey. The reason why I'm teaching you all this is because at some point in life, the way we are all here, maybe at the beginning of January, I'm going to do a very serious thing. For people who will be here and they are still not making it well, I'm going to take you people and place you in one group and give you signals for 3 months. Now it looks weird. Yes. Yes, I think I'm going to do that. I was thinking about it today, and I realized that I may now just take two. That is the next level challenge. When I know very well that at the current moment, I decided to take a challenge of teaching people who are serious, and then they trade like me. So currently, I know that at least people are getting the concept and they are able to trade. Now, the next level of confidence and the challenge that I need to give myself is take you guys and be giving you exactly from entry to exit. I don't know how ridiculous that one is going to be, because now I know that your accounts are on my neck. Tefilas, would you do that?
Thank you very much.
Huh?
I will.
I'm there.
It is going to be very ridiculous, but I was thinking about it today. Like, if you want to offer signal, why don't you start with you people? Because I can offer guided signals, and I realize one thing, that back then when I give people trade and then they lose, I really used to feel very bad. That is why nowadays I rather teach you how I look at the market and enter, so that when I tell you that now this trade is about to be ready, what should be coming in your mind is the entry, and then you know how I enter the market. So I'm expecting that if I'm telling you that this market is ready, you go to 5 minutes or 15 minutes or 1 hour 30 minutes and you see exactly the same thing I'm seeing, and then you enter, then you hit your stop loss on your own, so I don't feel bad. But I was thinking about it today and I realized one thing. Why don't I just take these people now that they still trust on me?
I think giving signals to people who already know your trading style is easier, because when it fails, they know there's a reason why it failed, not somebody blindly taking signal.
Yeah, even if I was to have signal services, first of all, somebody would have to pass through my basic course, because you need to know exactly why I'm taking that trade, and then you also need to be aware of my thought process whenever I'm sharing a signal. Right? Somebody should be aware that now when I tell you, like, when that candle close, enter, it shouldn't be a big deal for somebody to be wondering that, oh, why is he asking us to take this trade when we can clearly see that now we are on a downtrend, but now he's telling us to take a buy. So such kind of thing, I was thinking of maybe in future I can offer people guided signal, but to do that I just need to take these people that already trust the process and give you guys signal for nearly 3 months and then see the results. It's going to be very weird, maybe starting January. Just have a separate group other than the one we are into. Like I told you, Junior, sometimes back, that I would really wish to have a group of people whereby we are looking at the market and then people are providing signals to one another, because like I said, sometimes I really get fatigued when I watch the chart for so long. So if somebody is also watching the chart somewhere and then they spot something, I can quickly check on it and approve if it is a nice trade. If it is a nice trade, we hope in. If it hits stop loss, well and good. If it doesn't hit, well and good still. So that is a point that I've reached. And now the next challenge I think I need to provide myself is open another group, and you guys, even if you're going to take it on them, I don't mind. So just be offering daily. Whenever I want to take a trade, I share entry, keep you guys updated. You take it with me, you hit stop loss, we hit take profit, we hit break even together. And then the good thing is that you shall have known how this strategy works. So even before that, before I recruit you guys, it's going to be free, don't worry. Before I recruit you guys, we have to pass through the 10 trade rules, and then most probably it would be best if at all you guys have a new account. Even if it is a $10 account, I don't mind. Even if it is a 5K challenge, prop farm challenge, I don't mind, so that I can help you, God willing, if you obey the rules of not quickly taking your profit very fast. When I don't say take profit, why are you taking profit? I don't want to. I want somebody to be following simple rules. Like if I say take profit is 1 to 3, now and then I say that let's wait and take 1 to 4. You should be able to wait. So from January thereabout, I'm thinking of taking that kind of approach over. For me to be more accountable to people is that not only on the type of strategy I trade, but it would also be on another level if I know that people's accounts are on the line. So I can't take BS. So guys, prepare. It is something that I thought today, and I resolved that I'm going to tell you guys. So you prepare. Now, on to the new checklist. I want you guys to note something. Initially, I've backtested this daily time frame thing on most pairs, as you can see from the short clips or the thing aside.
Sorry to cut you, boss.
Yes.
Sorry.
Yes.
Is this being recorded?
I hope it is being recorded.
Okay.
Do you feel like there is much you need to rewatch?
Yeah.
I want to assume that it is being recorded. I want to assume that is. Let me just check. Yes, it is saying that we are into 32 minutes of being recorded.
Okay.
So like I was saying that I've really backtested this daily trend thing. Let me just give you an example of whatever I'm saying. If you are only trading GBP JPY with another pair, for example, and this particular day, whatever you are doing is looking for buy, how many losses and winners do you think you would be there for the losses on the days you are looking for sells and sales did not play out? That is just daily time frame. Which one will be more, buyers or sellers, or buys would be more profitable than sells? Which one would be more? Between buying and selling, this market that I've underlined here, which one is more likely to work more?
Buying will be more.
Buying.
Okay, so buys would be more.
Yeah.
So ideally, that is how I always come up with this strategy. I realize one thing: to be focusing so much on analyzing 4 hours alone is detrimental, because when you go to 4 hours, as an SMC trader, check somewhere around this zone, you would realize that there was a lot of change of character and inward change of character within internal and external in 4 hours, and think that now our take profit should be somewhere here. So this would be the next take profit. And then if you also equally use through SMC, you would see that this looks like a waking of this particular zone. So this is a week, and then now we are starting to drop, because ideally we know that when we get a purge in buy side liquidity, the next liquidity to be raided is on the sell side. So with all those reasoning in mind, people would be focused on looking for sales, for sales around this region alone. Even after this, people will still be looking for sales. Even when the market has started going up like this, they'll still be looking for sales, because that is what we are accustomed to. Now, how did I come up with looking at the market this way? It's because I've watched most of top SMC traders and how they trade from Nigeria and the rest of the world. And I realized one thing: whatever they are teaching is making sense, yes. But from a bigger perspective, you rather follow the daily time frame than to follow the 4 hours and change of character. Because if I'm not wrong, most of you guys are taught to be using 4 hours as the higher time frame. If I'm not wrong, most of you are taught to use 4 hours as the higher time frame. Some are using 1 hour as the higher time frame alone, and then some are using 15 minutes. And I've used all those time frames, by the way, to look for true SMC trades. So I know how much they could be deceiving, and they could be placing in a situation whereby you want the market to reverse. Like there's a certain day, a friend of mine, just from Nigeria there, he marked something like this and was expecting that this is an order block, and it is a very good order block because it even raided some few candles there to form what is called a SCOB, single candle order block. So ideally we should be having some demand popping up somewhere here. So somebody is expecting that he is going to see 4 hours a change of character and then buy this market to target these particular highs. And he was telling me that he is expecting that the market to reverse there. I'm asking him, now, this is very good risk to reward. It's okay. But first of all, who told you that the orders are still here, filled by those BFIs? This is like May. This is August. That is barely like nearly 3 months plus. So you're telling me that some banks were holding positions this particular whole move, which is okay. So this would be now the initiation point. They were holding all these moves while in drawdown, so that they can get the orders being mitigated and closed. And then now we can see a 4 hours change in character. Now you see 4 hours change of character, push back there, then we expect a push up. Which bank would be able to hold these positions like this? Even Citibank cannot do that. JP Morgan cannot do that this long. Whatever they did was very simple. Even if we are just arguing, we are not sure. What was happening is that here is where they unloaded their orders on this particular. Let's say they can load their orders. They can trap SMC traders to push this candle up, or they can even load more orders at this particular point. If you check a particular point at this particular point, that is when maybe they loaded their order. Then what happens? The following day, they mitigate those orders, then they keep moving upward. Somebody is seeing that there is a very good fair value gap here, which is there's no problem. But the question is, when order blocks and order book was being formed, you don't know in the fair value gap. You don't know in the fair value gap at what point were orders loaded. Orders that were loaded in this market, you don't know that at what point they were loaded. Maybe they were loaded somewhere here. You don't know. The only way to know is that when mitigations come back, you realize that indeed orders were loaded here. Because if you check this other side, it gave no reaction. It gave no reaction. Whatever it did, it just ranged people. This is a range. If you go to lower time frame, if you mark the high of a previous candle and the low of a previous candle, if you go to lower time frame, there's a range here because people are expecting some reaction, and therefore retailers will be playing along here. But what you are doing is building range, internal range. If you go to let's say 15 minutes, you're going to find a very serious range there, because the banks know that you guys are going to play we are going to play cat and mouse, because we are expecting some orders to be loaded there. Now what happens? We get some range. As you can see, if you mark the high of this is the range that was being played. And then what happens? We break out of that range. We break out of this range. This is the this something I call, it is not my own calling, of course, it's something I obtained from the internet, which is this RIMC. So we have, market will always move like this. They start with the ranging, then we have the initiation. This is the first part of the range. We can even add, if you are an ICT guy, you're from an ICT background, you'll see that we first of all get a sort of range. Then we have AMD cycle playing in. So we have this would be accumulation. If you are, by the way, the 2017 ICT model that is highly hailed, I watched the whole of it. I watched the whole of that ICT thing. Very boring, with a lot of unnecessary bragging from ICT himself. Accumulation, manipulation, and then now we have the distribution, like here. Then we have the distribution. Is there somebody who knows Kimmel? Yeah, Kimmel trading. Or am I the one that watched so many YouTubers? You know, guys, do you know a guy Kimmel trading? Is a Portuguese, currently living in Dubai. What are people left in this thing? Have you guys left?
Oh yeah.
So there's a guy called Kimmel Trading. Kimmel Trading is the one who trades AMD Circle. This is now called AMD Circle, trading circle. So if you introduce the session range liquidity, so session range, so there was no much movement here in this session, so there was no session liquidity being taken. So basically it is accumulation. We manipulate people on the upside and then we take them down. Distribution. This is 2017 ICT model. I used to trade it back then until I realized that I don't trade subjective things, because anybody can conclude that this is the range. This is the range, then this is the manipulation, and then this is the distribution. Or somebody comes and says, oh, this is now the range, and this is the manipulation, and then this is the distribution. So I don't trade anything subjective. That is why you see I try to make the strategy look as mechanical as possible. So if you look at this thing from RIMC, range, initiation, mitigation, continuation, you see that we had a range here, then we have an initiation leg, range, initiation, then we come and do mitigation, and then now where the move starts is where the big moves are always there, is the continuation leg, the C. So this continuation leg is always the biggest, and it is this one that people who trade this concept have the maximum stop loss. This concept of discount, of premium and discount from the ICT thing. because when the continuation leg starts, it will disobey all this noise, because everybody will be saying that, oh, now this price is really overbought, this price is really oversold, but it just keeps on being oversold. It just keeps on being oversold until this point. Now somebody will be saying, now we are trying to reverse back. But if you check in real sense, it would be saying that now this could be another now range again, then we can have another initiation at this particular point. We can break out of this range down here, then we mitigate, and then we continue. So from this learning this concept is when I concluded that this strategy is subjective too, that now we are in discount, so we need to buy or sell. Now if you want to apply this concept is very well placed in all the strategies I've ever shared. At the same time, currently it is best suited for 1 hour. Let me give an example. It is best suited for 1 hour. Just give one simple example. Now, what time is this? This is of course this is 5 a.m. my time. I wasn't awake. But if you follow per hour, if you watch this thing in every 1 hour candle, 1 hour candle is made up of 1 hour order book. Let me search for something called order book so that you can see how order book are arranged. Just a minute. Order book. So I'm looking for something called order book so that I can show you how order book are. Actually, Coinbase has really explained it when I find a diagram. Nice. So I don't know if you guys can see another slide presentation.
Yes, sir.
Yeah, so something like this is what is called an order book. You see, it doesn't contain charts. This is the order book. Then it generates these charts. So if you look at this is how people are buying and selling, bid and ask in the real market. So it is from this that they're able to generate volume that are kicking in. This is sell volume, this is buy volume. Then at the same time you can generate these line curve. At the same time you can generate candles. So these candles are based on let's say 1 hour, 2 hours, this interval. Like in this one, the interval is placed to 1 day time frame. Now if you know a little bit of coding, you will see that this is how people code this strategy. You check the interval. So this is interval in every 1 day. So you realize that maybe let's say that this is how people transacted Bitcoin in 1 day, 1 day, 1 day, 1 day. Then they take these values and they're the ones using it to plot all this. So this is what is called an order book generally. So let me check here again. Let me check again if I can see any clear one. So if it is from those order book that we can comfortably discover, share this. So if you check here, order block. So this is the site called Medium. This is where I read some coding things. So this is now it's called an order book. See the way it is moving. This is how orders move in the real market. So when we reach this point, before we begin selling, the red one is sell, this is buy. This is what is called now a point whereby we are talking about discount and premium. So when the price is here, when the price is heavily being bought, and then it suddenly goes down, people now begin to sell again. So it is at this particular point that differentiate between the discount and the discount and the premium, something like that. So with the concept, that is what people now are coming back to to make of these charts. But in real sense, the best way to know about premium and discount is to always go for individual candles. So if you check this individual single candle of 1 hour, it contains orders the way I've shown you, and those orders, if you mark from high to top, at the middle of it, anything above here would be what is called a premium. Then here would be discounted prices. So in a situation whereby you want to sell in this market, you would wait to see the high of this being taken. It means that most likely all orders that were in this 1 hour plus this the previous 1 hour, for example with this fair value gap, all of them are mitigated. So when we see market coming and tapping this, taking the high of this and then starting down, this is not the real premium and discount. So premium and discount value in order book per hour. So it means that this market came in with a lot of momentum that took all the orders and then immediately goes to the normal direction where the orders should be going, and that is what we are all looking for. So you only use daily time frame for direction to know that currently we are just buying, so I should hold more when I get a buy trade. Like in this market, the market is selling. So if I get a sell, like if you go to daily time frame and see that previous day closed bearish, the other day closed bearish, or out of like let's say 4 candles, the direction is on the sell side, not ranging, then if I get a sell opportunity, I can hold for long. So in this case, I would just wait for the high of this candle, red candle, which means we are selling, to be taken. So when you see this forming again, it was not taken, so you just shift this high to the next year and wait for another of that opportunity. So let's see. When that one is taken like that, it means that there was enough momentum that came and liquidated all orders here. So it will not have any other business coming back here again if the momentum is still on the downward side. And that is why I say that if you are selling, you target only the highs. If you are buying, you target the lows. That is for the 1 hour option. So you shift to 1 hour, or you shift to 5 minutes if you are dealing with 1 hour candle, and then you look to see a liquidation. If you see a buy, if you see the candle not liquidating this, so when you saw me placing this line like this with some dollar sign on it, this is just a liquidation of those orders of that particular 1 hour. So that is just liquidation. And then when I look nicely, I can see that truly we are having a lot of higher highs, higher lows, and that is just another form of liquidity based on some line. So ideally, people are expecting this to move like this, but in real sense, we know we are trading liquidity, and for that reason, we are aware that this is all going to be liquidated, because when 1 hour orders are all mitigated, all 1 hour orders, this is just a build-up of liquidity that should be all taken, because this is not our direction. This efficient market was just an order being built very efficiently. There's no unused imbalances, and if you see a unused imbalance like this, just be aware that you can be liquidated and then you enter again, because there could be more momentum here. So if you see unmitigated like this and then the entry presents itself, just be aware that we have a second liquidation, and that means you are wrong. You are not wrong. It means that you just need to get another entry. So like I said, when this 1 hour is taken, of course this is bar replay, but we can still go to 5 minutes, and how you would enter was when you see 2 candles of 5 minutes close in your direction with some momentum. So you can see this is the first one with even a week, to show you that indeed this was just a liquidation of the previous orders of the 1 hour in the order block, in the order book. I'm seeing a lot of jargon, so if I told you are still young in the SM, little bit. I don't know how to help you a little bit there. So this should be a stop loss because this is the second candle close and then it has closed with enough momentum. So you're just aware that since we had an unmitigated order here, we can liquidate. So stop loss just above here for some 33 pip stop loss, and you know that all this will be taken. So if they are taken, maybe it is 2.6 and we are pro trend. If we are pro trend, if this was a counter trend, you should only target, like, let's say a 1 to 3.5 thereabout, or a 1 to 4, because this would be your final TP. But we all know that there are sell side liquidity resting below here, and therefore you don't mind getting some few pips below here. So that would be like 3.5 if it was a counter trend. But if it is pro trend, then you are aware that this is a weak low. The normal break of structure we have weak low, and for that reason it's going to be raided, and we can even target a 1 to 5, 1 to 6, depending on your risk tolerant and ability to accept that if you are stopped out, it's okay, and then you let it flow if it is pro trend. So you can see the way if it is pro trend, it can move very fast. And this is a trade that was at 5 a.m. my time, even before session began. That is what happens when you see most of orders being liquidated. Now, how do you manage this kind of trade? Ideally, if you look at this market, this is how it went. We got some small pushback here. If you don't know how to note guys, I'm not staying in the bush.
Yeah.
And that should confirm that I'm human.
Your soldiers are crying.
Yeah, ideally I should be somewhere that is very free from noise. But this is weekend. I also need to be close to my children. They should be seeing me. So, guys, just bear with me. Just know that I'm not saying good. Confirm that I'm a human being. Anyway, I'm being ridiculous. So let's continue. As you're
Not really. I think I don't know if on others will actually see things the way I see it. I think we should try and start from all over again. Maybe a different pair that's played out. Use the replay to
I'm
more
going
like a step by step. Okay, this is on you. This is what I look out for and all that.
I'm going to do that. I'm just
kind of step by step.
I'm just giving you a head start because I've talked about so many things. So I'm just giving you a head start of exactly how it should be happening. Right. And then now we go to the checklist.
Okay.
So ideally, this market is this is how to go about it. So there's what is called an SMT. SMT is money traps. So somebody, if this should be an SMT, then it should be raided because somebody is seeing that we are having high lows. So they are expecting that they want to buy here. So this was a trap, and therefore it was raided, and you are left with your big green. That is what is an SMT. An SMT is a fake order block, fake fair value gap that looks extremely real, but it is in the opposite side of the higher time frame. I don't know if that makes sense. If you see that an order block is extremely clear and it has a very good fair value gap that is unmitigated, but then on the higher time frame it is on the opposite side, just expect that one to be a trap, and that is what is happening. The best this order block could do is to wick this place out, and then we get a new sell like this. Then we hop in again and keep riding the market. So let me just delete this everything, and then I wanted to explain order block in terms of 1 hour, and then I can proceed to the other checklist. And so somebody may be wondering, like, why choosing to do this? All these things I do them because at least I have a small background about SMC, so I can quickly discern information and have a reason onto why. Most probably that is what happens, which may not be true. Of course, we are not the big banks. It may not be true, but that is how it is. Now, so I was saying that on a normal checklist that we use, we usually go with the daily outlook. So let me ask you, if you give a grade 1 or nursery, I don't know how, in Nigeria and other countries, which one is the lowest ranking school level? In my country, we have what is called primary. Oh, I hear Nigerian movie saying, I'm in primary 1. What about South Africa? Huh?
Kindergarten.
Kindergarten.
Kindergarten in Nigeria.
Okay. So in Kenya, we also have kindergartens and nursery schools. So South Africa, what do you guys have there?
We have the same, yes. We have the same.
Actually, we are all from Commonwealth, so you should be having the same system, nearly the same system.
Yes, exactly. Yeah.
So if you give a nursery child and ask the nursery, where is this market going? Meaning that if you see red, we are going down, and if you see blue, we are going up. What will they tell you? This market, where is it going currently? Just checking, let's say 4 candles up backwards.
We are going down.
We are going down. So that means that the daily time frame, whatever we will be using, is to detect the direction using 4 candles, the 4 candles that we normally use. Just use them to know the direction. Now, if you check as a market of this nature, this one, there would be direction, yes, but really, this market is trying to move. At some point, it was going up. At some point, it was going down. At some point, it was going down. At some point, it showed a sign of going up. So this is a ranging market. Now, at some point, this market was going up. At some point, it was going down. So maybe you don't know, next week from tomorrow, we can have it going upwards. So whatever we will be using the daily time frame to do is to use the same 4 rule candles to check where the market is going. And you don't fixate yourself to that particular direction. I hope that it should be clear. You don't fixate yourself that direction. What you need to use is to know the trend. Which trend are we going? So step 1 is check daily, check daily time frame and know the overall market direction. Strictly for risk to reward only, not to be deciding whether you want to trade it or not. If you get a trade in this particular point, when you get 1, 2, this day, the direction is obviously buy, so you can hold for long. But it doesn't mean that you will always be right all the time. So it means that that day you may be secured a 1 to 5, 1 to 4, or if you are waiting for a home run of all these ones being liquidated, then probably you are stopped out at break even, or a 1 to 2, or a 1 to 1. So the time frame is strictly used for determining whether we should be holding for long or not. Now, if you are looking for that particular sales that day, like let's say on Friday, the sell I took, I could still hold it because I'm expecting that we could be still going downward. I could be wrong, but that is what the market is telling us, that I can still hold for more opportunity. So that is why the only daily time frame we are using is to know the direction of the market. I hope that is very clear, Junior. So from today henceforth, you'll be using daily direction to tell you whether you should be holding for more opportunity or this is just short-term pullback.
For a short opportunity.
Yes. If you are in this market, you know that this one now we are buying as much as we are ranging. So if I'm buying, I may likely try to hold more, but though it is unnecessary, the best one is this. If the market is here, you are here. This market is already trending upward. You don't have any business holding a short-term position, and I'm very sure that if you go to 4 hours or 1 hour, you could have probably found trade on this day for a sell position, because there are situations whereby the market has opened up and started by taking the buy side liquidity. So then we wake up, we find that London is only willing to sell. So we can sell up to this particular point, knowing very well that we don't need to take very long-term sales because the market is already bullish. So we can take to this range. Like I said, if you take the high and the low of any candle, expect that there is demand zone there that should be pushing price upward. That is the quickest way to see a range. Range is high and low. If you check low of another candle and high of another candle, if at all they are closer, just know that there is a range there playing out. So you can always take to see trade taken to that particular point. At the same time, you can use that particular short-term trade to target the liquidity sessions high or low. I hope that makes sense. If you are taking a counter trend, just target sessions low or highs as your take profit for a quick 1 to 3, 1 to 4. Maybe that is the only opportunity you've already had since the beginning of the week. You don't need to let it go. Now another example is here. You can see that we are like sort of buying. The momentum is trying to kick in. If you count the last 4 candles, you can see that from this point 1, 2, 3, 4, it is like we are having buy momentum. But all of a sudden you can see that there was a very big wick here. This big wick probably gave us an opportunity. It could be it was during New York, and sorry, not New York. It could be London and then New York.
London.
Yes, Asia and London pushed it down, and then New York reversed it back. At the same time, look at this. You wake up, you're expecting buys, but then 1 hour and 4 hours are begging you to sell. What do? You can take to sell a little bit into this place, and you realize that you just got a good trade. Same to this point. You are expecting that this, since we had this a very big drop like this, ideally we should be looking to see sales continuation. But then this day probably 1 hour was telling you to buy me by taking the order block liquidity. So you could have just bought, and when you buy, this was the candle close, and then you can see that even this day on first there was this momentum, this buy momentum here that should have reached you some 1 to 4, 1 to 5 before even this drop, because maybe it went up first before the drop to end up a day on a sell. And then the following day you wake up in the morning and you are looking just to sell. But what happens? 1 hour and 4 hours tells you that now we are only taking buy side liquidity. So what do? You buy. I don't know if that makes sense, guys.
Yes, it makes sense.
So the 1 hour is strictly used to tell you whether you should be holding or you should be taking quick trades. So junior, from today do not fixate yourself into 1 hour and then now you start looking for alignments.
Okay.
Those alignments could be telling you that we are giving you an opportunity for a counter trend, and that is what we want to now proceed to. So once you've confirmed that the direction is on the sell, so you don't mind taking sells and holding for long because you are in favor of the higher time frame. Now after this, yeah, after you've decided the direction, by the way, if it proves challenging, then if one day is ranging, you can avoid that market so that you don't get swept in and out. But in most occasions, if daily is ranging, 1 hour will not be ranging. 1 hour will be giving you very good opportunities for a 1 to 4, 1 to 6, 1 to 7, 1 to 10. But ideally, my sweet spot is always maximum 1 to 8, unless I want to flex, which is unnecessary anyway. Okay. It's unnecessary. So when after you confirm the direction, like for example, we are confirming with you right now that the direction is on the sell on GJ. So tomorrow, if I find a buy, I will take, but knowing very well that this one, I'll be very quick to break even. At the same time, I'll be very quick to take my profit and let the market do whatever it likes. Does that make sense? So tomorrow, do not be surprised if you see me getting a buy on GJ. Now, after this, after checking the direction of the daily time frame, shift to 4 hours to look for trade. Look for the same thing, liquidity rate on the order block of that particular 1 hour or 4 hours. Sorry. If you don't see that, the reason why I'm saying I'm giving you 2 options is that if you don't see it play in 4 hours and 15 minutes. The same thing I've just shown you I'll show examples. In 1 hour, you shift to 1 hour, because it could be playing in 4 hours and not in 1 hour, or it could be playing in 1 hour and not 4 hours. So that is why you only need to stick to 2 pairs maximum, so that you only get consistent trades. So we shift to we shift to 4 hours. So we shift to 4 hours. Now let me explain the same thing in 4 hours. Let's look for an opportunity. Now, the first thing, I don't know if you guys remember that about the 4 candles being in our directions, the 3 candles being in our direction in daily time frame, for us to declare that is a direction. Do you guys remember that rule?
Yes.
That rule,
Yes,
that rule is what you need to apply in 4 hours and 1 hour. Let me repeat. That rule of checking the last the last 4 candles and seeing that at least 2 or at least 3 are in our direction. In this case, I've allowed you to only use 2, because 2 and then the third one giving us a liquidation is the highest probability in this particular option. Let me explain. 4 hours, this day. Let's check this day. Criteria number 1 that we all need to remember is that you can only take trades if the previous 4 hours or 1 hour is in the direction you want to trade. Does that make sense?
Okay.
You cannot interchange.
Yes.
I'm repeating. You cannot interchange for the sake of you seeing that this is nice. We want to avoid this the shiny object syndrome. You can only take trades if the previous 1 hour or 4 hours is in your direction. If it is not in your direction, forfeit that trade. Just let it be, so that you are consistent. Now, if you check here, let's count this candle. This is the first buy. 1, 2, 3, 4. Now look at this. This one takes the liquidity of the previous one, confirming that that was arrayed in that particular order blocks or order book. This was 1700, which is in New York session. This candle was raiding the low of this in a buy move. What do you expect? This was the market then. We are buying. Ideally, we should be selling because the momentum is on the sell. But then what happens? We see that we are having a buy momentum, the previous candle. Now, let me tell you something. If at least 2 of the candles like this are in your direction, 2 candles like this, so that the third is the one liquidating the low or the high depending on our direction, that is the highest probability trade. Because you have two candles of momentum backing you. I did not place them on the checklist here so that it avoids being bulky at the same time. Since I mostly shoot videos for fun, I'm tired of filling my checklist with lots of information. So if anybody wants more information, they can just join the Telegram group. It's free. So option 1, switch to 4 hours and check liquidity raid or week off, and then shift to 15 minutes and get entry at 15 minutes double close in our direction. Is this not the same thing as 1 hour we have just done? So let's just remove this like this. What you'll be doing is very simple. You come to the market. This is the market. After every 4 hours closure, please mark the time at which 4 hours is closing in your time, so that you will be placing these lines. If this was the case, we would have placed here, and then this one did not raid this low, and then at the same time we don't have 2 candles in our direction. Though 2 is okay, but just know that that is low probability. Does that make sense? Only 2 in your direction make the highest sense. So this one does not take the low of that. So this candle here, this one does not take the low of this. So we ignore. We place this one here. Then now, after placing that in our real market situation, we would now relax and place that line like that. So that will be arrayed. That would be arrayed in that particular 4 hours order book. It is that simple. So when you see 4 hours arrayed in that particular 4 hours order book, so that one is still not yet arrayed. Now you can see that that is now arrayed. So from that, we have 15 minutes. That is a confirmed rate that the previous 4 hours order book has been rated, and probably, if we are right, then this market should just be wicking. Wicking is a high probability. If it closes below, just know that it is low probability, but doesn't mean we cannot take. So we go again, and we're still on the time frame. We check 15 minutes double close in our direction. So far we only have one close, and it was before the liquidity raid or week. So we start waiting for 15 minutes to close in our direction. Not yet. That is the first one, and that is the second one. That confirms this was just a liquidity raid, and therefore you can choose to this is now the entry. You can choose to enter immediately here if it is small. If it was somewhere here, I would have entered. But since it is bigger like this, it would be nice to see it come back to this order block. Stop loss just below here for 25 pips stop loss, and then I target. Since it is a counter trend, I can just target depending on where I get my stop loss. Let's see. I open my session indicator, and I can see that if this is the high of a New York session, so this is also the high of the previous New York session. So this would be so high. I don't know if the market would reach there, but let's just see. It would be 1 to 5.6.
1 to 3.5 would be okay.
So 1 to 3.5, 1 to 4. I will try to squeeze it to 1 to 4. If at all it comes and push here. If it doesn't push here, I am willing to forfeit this trade. Now, another thing, that whenever you place an entry, you should expect that if this is liquidated and then it is wicked, you can still go again when you see them close in our direction twice. That does make sense. Do not expect that all the time your stop loss are going to be perfect. This could be liquidated still if there is no momentum. If it is liquidated and the market keeps pushing down, then the whole idea was wrong. But if it is liquidated again like this and there's no momentum, it goes back inward, we enter again. So this would be the trade. At the same time, when you choose to place at this particular point, just know that you can miss this trade. With all those factors in mind, you are done, and the trade opportunity is just to wait. Just to wait. I think we got tagged in. At this particular point, we should be half break even or break even. Let's see. Now it went for a break even, and that is now you see for a counter trade. This went for a 1-2. But the good thing is that we were tagged in. Are you seeing that? That was a counter trade. The problem is that now it is playing in Asia, and it is coming to liquidate the same point with the late momentum. So the Asia people can maybe get this opportunity. I'm not sure. The Asian people can get that opportunity. If you entered there, you should have at break even by this time. So you see how quick you got to break even when you got into a counter trade. So if only you target the New York session high, you got the trade. If you target more than that, 1.4, 1.3, that was a counter trade, and therefore we didn't get that entry, and it is okay. At the same time, this is how we would have a break even. This is, let me mark here. This is the first push up, push down, push up, push down. So when this broke, it would have been a even. When this one broke, thereabout. You can see this is another one, then another break here, taking this high. By this particular point, we should be all break even. Right here. Look exactly at the week. And that is how the trade played out. That is a counter trade situation. Now let's check the same situation and see if we got a 1 hour, if there was a 1 hour opportunity. You see the way it is easy. If you compare this one, if you compare this one to the other one, I think this one is the easiest. Sorry for that.
Yeah, sure. Yeah, this is better.
This is better. So let's check 1 hour. If we got an opportunity this day, let's check for opportunity this day. Now the same thing applies in 1 hour. Now if we check from down here, let's just check from down here. There could be opportunity here. This 1 hour's low was wicked, and you can see if you check the previous 1 hour before it was wicked, what did we have? We have 1 2 1 2 confirming. If it is 1 2, at least 1 2, it is high probability. You don't get it mixed up. If it is mixed up like this, just know that most probably it may not play out. So it is low probability. So at this particular point we are going upward. So if you were awake by this time, which most probably all of you will be awake, this was an opportunity to trade. And if you took the buy here, you shifted to 5 minutes, you should have gotten the entry. I don't know if from other brokers like Oanda this low was taken. So we will always be using different brokers. Are we together? You can be checking different brokers whenever you feel like something was wicked out. If it was wicked out in another broker, it's okay. You can still go in. You don't need just to fixate yourself into FXCN alone. I hope that makes sense. Now, at the same time,
Yes, boss.
Yes.
at the same time, anybody who was alive at this particular point, most of us would be half alive. You can see this was 6 a.m. my time, so you shift there and check for an opportunity to buy. So let's check for an opportunity to buy. By this particular point time, I don't expect anybody to be trading. You should only trade one hour to London open for you to get the Frankfurt momentum. If you don't want to get such shoddy trades, are you together? If you don't want to get shoddy trades, trade 1 hour to London open. It's very okay. Or at maximum 2 hours to London open. So you shift to 5 minutes. So this is where the raid happened. You see, the raid happened at this particular point. Then what happened? It closed below it, never wicked it, and therefore this is low probability trade. No matter how much you take it, this is low probability trade because it was supposed to just wick it and go inside. But anyway, even if you forced entry, you are just forcing it in the next candle to open. This is where 1 hour closed. 1 hour closed here. Closed here without wicking and going inside to continue with the buy. So if you force trade inside here, there was no trade here. But if you force it, because I can see that some people like forcing issues, this was where we had 2 candle close in our direction. This is the entry, and therefore I'm expecting them to be at break even by now. I don't expect to be forcing issues, but I'm talking about situation where you may force. Situation like this may arise if you're using 4 hours. If you get entry in 4 hours, 4 hours, it may come inside here because 4 hours is a lot. So it may wake it at the start of 4 hours and then immediately start coming back. So in most occasions, if it doesn't wake it, just know that this is low probability trade, and therefore even if I'm taking it, I can easily be wicked out. So you can see that one is already a break-even trade. Now the reason why it is break-even is because it is quickly break-evening, is because it closed below it. It should not close below it more than these 3 candles here. If you see these 3 candles closing like this, just know that that is now low probability trade. The maximum you should be doing is 2 in your direction in 5 minutes. I don't know if that makes sense. So far we've seen 2 trades that are already going break even. You don't need to be getting unnecessary stop losses. Now if you are somebody who keep taking profits partials, which I discourage, this is 1 to 3. If you wanted to take that trade, that would have been an opportunity there. But this is 7 a.m. my time. Obviously I was awake at this particular time, but I wouldn't go to charts. I don't want to be a slave to charts. I want it to give me opportunity at the time I want it, 1 hour or 2 hours maximum to London, and then on my side I close charts around 6 p.m., 7 p.m., 8 a.m. I close charts. I don't want to check again. So whether the opportunity is there or not, I've left it for other people who trade those particular time frame. So don't be so greedy. So let's go back to 4 hours again and look for opportunity. So 4 hours is a little it's showing signs of buying. So if we were trailing this, what we're doing is just be marking the lows and then we relax. Immediately we see the low being taken, we shift to, immediately you see the low being taken, you shift to 15 minutes if you are in 4 hours. If you are in 1 hour, you shift to 5 minutes immediately. You don't wait for it to close first. Are you together? You don't wait for it to close. It should be closing when you're already in. So let's see if the next one goes. It doesn't go. Now another problem here is that I'm using bar replay and therefore it may close before this, but in real market it will close this when I'm
sorry, I have a question.
Yes.
If we're waiting for 2 candles in our direction, must it be consecutive candles?
If it is consecutive,
I think it's safer.
It is extremely safe to take consecutive.
Yeah.
And then you'll also have less trade. But if you take the ones that are not consecutive, most probably you're going to get so many trades. Like, okay, this is what time? This is 1 p.m. This is at night. You see, there was a trade opportunity here to sell. Most probably you got this sell and you are immediately broke even because of wrong timing. At the same time, this is the time. This is now. This is what time? This is when we are already awake at this particular time, but I'm not sure if it gave entry. Let's check together. 15 minutes. Where was it traded? Now you can see, even if we shift this thing, you can see that after raiding, what happened? It went deep. So at that particular point, it is upon you to choose. I don't like taking such trade. And if you are taking, just know that the best option was when it was weak. And then you get three candle closures in this direction like this. It is not high probability. As much as you can see, after 2 candle close in our direction consecutively, what did it do? It gave an opportunity. This was a 1-2. It went for a 1-4. As much as it is wrong timing, low probability entry, it worked out. So only on 15 minutes that I would always advise to take, if you like, if it is not only. But for 15 minutes, 5 minutes, if you see it not closing below there 3 times, just leave it alone. Are you together? But on 4 hours and 15 minutes, it is your personal choice. Just know that you are now going into a low probability territory. Is that okay? Then you cannot force issues. This is where the low is, and you are seeing that, oh, it may not close, so let me just hop in here, because we can see 1-2 candle close in my direction, so let me just hop in. Please do not come to me with such kind of ideas. That I don't think, not all the time it will be closing. Yes, it is okay. You can equally trade the ones that do not close. Just know that you will be easily liquidated. Most of them do not close, yes, but you don't know how much the wicking is going to happen around here. So somebody may conclude that now we need this one to close below this particular zone, but I can see that it came here rejected and immediately closed into 2. Two of them have already closed in our direction, so let me just hop in for a buy, and then you are humiliated again. And then now you can see that now we have 2 candles closed in my direction, sells. Now let me take the counter trend. Now you are selling. That is not how people develop edge. So you can see this one played out as much as it was low probability. Let's go back to the chart. Again, it played out probably because of the momentum. Are you seeing the way we need momentum? This is 1 2, 3. This is 12 consecutive hours of buying. What do you expect is going to happen if not for buys? Now again, we can see the same phenomena happening here when this low was taken. Are you guys seeing? Let me just clear everything again. Are you guys seeing when this low was taken here and the candles are 2 in a number?
Yes, sir.
You shift to you shift to
Yes.
you shift to 15 minutes and look for entry. Double close in my direction. I'm in. Simple. So even if I'll be giving you signals, this is exactly how I'll be giving you signals. There's nothing miracle. Sorry, that is wrong English. There's nothing miraculous. I'm being ridiculous. Now you can see this. We got this, then immediately it's reversed inside. Let me shift this one. This is where the reading happened, and immediately we reversed inwards. Then we don't get to. Then this is where we get to double close. So you can take this one at retest. Stop loss below here, since we are now moving upward, and then just know that if you are liquid, you go again. Alternatively, the best stop loss would be here, but that you've eaten into your profit. You just eaten into your profit. So just move with the momentum, up, down. We got down, then change character. If you go to 1 minute, 3 minutes, 4 minutes, there's a change of character. So I've not said that you'll be doing that, because if you be doing that, you will be finding being chopped out very easily. So this should be a stop loss somewhere down there, targeting at least a 1 to 4. You can see we got 1 very quickly and we moved out. You always target at retest. After these two candles have been formed, if they are very close, then you just enter immediately. This one closes, you can just enter. Now in some occasions you will be entering and the trade will be flying into 1 to 100. Just be aware of that. But if the market is ranging, like in this situation in 4 hours, what was your business targeting? 1 to home runs. As you can see that this market is already ranging. If you go to the daily time frame, this market is ranging. Then you have a small opportunity, then now you want to misuse it. Now let's check this. This was 17 a.m., 17 p.m. my time. This was wicked here, but again it way closed above it. Because at this particular point we should be looking for what? Sells or buys. When this low was liquidated, as much as we already have 1, 2 candles in our direction, you can enter. But you can see it was liquidated and then it went way above. So those ones are the situation whereby you will be dealing with. Now look at this. It liquidated somewhere here. Then this was the first candle of the 4 hours. Then it liquidated, no close twice. You leave it alone. Look at where it closed twice. Way above. 2 candles closed in our direction. So like in this case, we just need to enter. You don't need a lot of pullback because all of them are compacted together. Stop loss just below here. Then it went for a 1 to 1 to 2, 1 to 1 point something. Then went back because it closed how much? Very far from the liquidation point. So it means that there were more orders for the buys that would continue fueling the buy than the sell. But still, with that mistake you've made, you still manage to get a break-even trade. This is a break-even. After you've gotten this change of internal break of structure, you head some back here, and then now this one was now pulled back up to some of this point. So this made now a break-even somewhere around here. Now with that mistake, you still need to get out somewhere there. So do not take the mistake. If it pushed deeply, do not take that mistake. Unless you're trying to develop something out of it, then I advise. I'm saying that. So not all the time this thing was moving out, because as you can see, there was so much efficiency here. So what do you expect? The market must have raided these ones. These ones were liquidity build-up. When you see the market is efficient like this is liquidity build-up. That is why you see it quickly liquidated all of them and even raided the entire buy-side liquidity. Then now started moving downwards. So you can see that is how to formulate. We just shift from 4 hours you check there is no trade opportunity, then you'll be monitoring in 1 hour. Meanwhile, while in the 1 hour, you know that the direction is you are also looking for sales. Sorry, you are also looking for 1 hour. So your responsibility is just to be shifting from 1 hour to 1 hour. You rest on 1 hour, but know that you can be setting alarms, by the way. That now 1 hour is starting, let me set alarm in the next 4 hours. You get alarm, and then you move your liquidity line. That makes sense.
Yeah, very well.
Yeah, so you just move it.
Much easier than the other strategy.
So
it is easier than the alignment.
Put an alarm for 1 and 4 hours.
Yes, exactly. It's less emotional and more objective.
Yeah. There was an opportunity. Yeah, this one, even for coding, I think this is the easiest to code. Like you can see this, we have 1, 2, 3. Now this is a situation whereby you are having not 2 candles in a direction, but 1. Just know that it is low probability. So there was a sell opportunity here, right? When this one was liquidated, of course, this one was way deep in the
buy or a sell.
Sell, because you can see the momentum is shifting where. Just check the previous 4 hours. Anytime you step into the market, just study the last 4 hours of candle.
Okay, yeah.
If you study the last 4 hours of candle, you will know that the momentum is shifting upwards or downwards. Now look at this. There was an opportunity here. Now this is an example of one that were both one candle on your direction. They are low probability, but better off than just taking random ones, because provided it has momentum, it is better. But the best is when 2 candles are in your favor. You have 2 candles, so the ones you are looking for the entry is the 3rd candle. Does that make sense?
Yeah, I think that's better off for me.
You want to wait for 2 candles, huh?
Yeah.
Then the 3rd one is what you're looking for entry. Pardon?
The 3rd one gets too weak.
Yes, the 3rd one is the one. Yes, exactly. Of course, sometimes you may find out that you don't get a lot of opportunities, so you can take this one. This one is the only one I advise you to take. If you don't find more opportunities,
I think it is better to miss a trade than to lose a trade.
Okay, personally I advise you to stick to 2 then. Stick to 2, it's okay, but just be aware that with the same 2, you can still get stopped out. Let me give you an example.
Yes.
This one is 2, we are selling. When this one wicked here, this was 1, 2. The momentum is on the sell side. So ideally we should be seeing this low being taken. So even if you wanted to hold to this low being taken, was ideally making sense. But I don't know if it played. Let me just fix this. This one was the weakening point. Let's increase that one. Weakening point. Let's shift to 15 minutes. I don't know. I didn't even check the time, because timing is very important. If you take it fast, yeah, this was it. So it was a break even. This is the time, yeah. So this is what the time it was. This is where the 4 hours started. This is the 4 hour starting candle. So this is where it was wicked. This one. Then immediately it wicked. There was no opportunity. It didn't even pull back. It didn't even pull back to the entry. Of course, this one you could take it because it was just 2 or 3. I say that you can give it opportunity. You can give it room to pull back slightly, but to your convenience. So this is where you needed to take trade. Stop loss just above there. So even if you force this issue, there are people who just don't like forcing issues. They you should have been break even, because this was major break of structure. Even if you took this one, you should have been half loss. Then when this one came here, it took you out. So that is an opportunity that was there, but the market never came back. And even if you're waiting for it to come back, you can see the time it came. It came at 3:30 Kenyan time. Are you awake at that particular 2 a.m. surely, looking for entry?
So I think also we need to observe if the market takes too long to come back.
Yes,
then
if the market takes
we
too
need
long,
to
it is just like I said, anytime something takes too long to materialize, that is a red flag. Uh, if your backtest data shows that it is playing hard to get, that is a red flag. That is just a red flag, a recipe in waiting. And so let's shift back to 4 hours.
Kevin, I saw your status about the red flags today.
Oh, yeah, if something takes too long, if something takes too long, like I said, if something takes too long to play out,
In general, yes. In general, in life as well.
yes, it is definitely a red flag. Now, can somebody see a very good opportunity sell here? Same way, there was a very good opportunity sell here. So this is happening at let me share this one time. These two, black.
1 a. You say 1 a.m.
This one happened at 30. Yeah. This one happened midday Kenya time, which was very good, and that is why it played well. Now this one was just a continuation. This one happened midnight. So midnight opportunity, we are not awake those times. We should not be slaves. So we just let it go. But if you got entry here, you should have been by this time particular point. At the same time, there was no opportunity here. This was a liquidation of high, but this momentum is already shifting buy. So you don't need to look for entries here. Now somebody will come again and show me that now we have a sweep of this. Sweep of this is okay, but the question is the previous candle sell if you want to sell? Hope that is clear.
Okay.
Yeah, you should be, before you start selling, is the previous candle was it a sell before the liquidation? Just be conscious of whatever is happening. So this one is a good opportunity, but this one happened midnight. So anything that happens midnight, ideally we should not even be back testing, because we wouldn't be alive at that particular time. We would be unconscious. So the only opportunity here that played out is are there people who stay up to 12 midnight Kenyan time? By the way, you can, for Nigerians, you can.
Sometimes I stay up to 3-4 a.m.
Oh, but if you're starting to trade at those particular times, you are just you are having an addiction. You need to see a doctor at those particular times. You only you should only.
If you're in Nigeria, you need to be addicted.
Okay.
Now don't chop productive they sleep.
Okay, you can take it if at all. You see that ideally everything is very clean. We have two candles closed in our direction. We have a raid. Yeah. Me, I'm taking this trade. So let's backtest these two before we wind up. So personally, I'm finding myself inclined to 4 hours. If I don't see 4 hours, then I shift 1 hour and be observing, because 1 hour is very fast, as we all can see. 1 hour is very fast. Now let's start with this one. I do not place the liquidity for this particular one. There was even another opportunity. Are you seeing here?
Yes.
This very good opportunity here. Liquidated everything. Very good sell-off. Another one here. But this was those times you are saying that in Nigeria you cannot afford to sleep. You guys will run mad if you don't sleep. You will run mad if you don't sleep. In Nigeria, there is no opportunity for sleeping. So this was the raid where the raid happened. So let's place the candle there and then shift this to red. Then this is okay. So let's go to 15 minutes and observe entry in both occasions. So personally, I would have taken the first one because that is when my sanity allows me. But as you can say, as you said, in Nigeria you don't have that luxury. So fortunately for you, you would be alive at that particular point to take this trade. So immediately you can see the way this one is very good. Way off, sharp, and then it turns immediately. No entry here. We relax. Sharp down with good momentum. Sharp down entry. We enter there. at the retest or at the close, there's no problem. Stop loss below here, and you know that if I'm liquidated, I'll go again. Don't be coward. If the market takes you out and it is still playing your momentum, go in and get what you deserve. So you can see this one was I can't even imagine where it went to.
Hello, sir.
Yes.
Yeah, I've just noticed an observation. If it's wicking on the H4,
Yes.
and I noticed if you go to the M15, and that M15 candle also wicks the H4 high, it's looking like a high probability.
Exactly. You've got it right. If it wicks, it is extremely high probability. And then if two candles, if you have the backings of 4 hours candles, which are 2 in number, you've counted 1, 2, and then you are getting in the third week, in the third candle, sorry, of 4 hours. That is high probability number 1. High probability number 2, it doesn't close above or below the week. That is high probability number 2. That one you can stake your kidney. So you will die.
Maybe we'll stake our Nigerian president.
No, he's very old. His kidney is not worth much. Maybe you can take our own.
Ruto is agile.
Yeah, his kidney is still worth good. So this one is 1, 2, 3. Of course, this one would wait. This one, okay, somebody you can decide and take 1 to 3.5. It's okay, but this one would be a very good 1 to 5. Would be nice. And then at the same time, there was an opportunity again to add more position. This was where you are supposed to add more position. Where is it? Now, you see, this one now wicked and immediately came back. This one was a week, then it came back. So this is each probability. But as we can see, first close, second close, we jump in. Stop loss just above this, so can always give it some few pips on top, sorry. And then this one was now the best. So for my Nigerian brothers who are alive those particular time, this one is what you should be using for flipping. Can see it really went. So not all the time you'll be getting this particular moves. So this was a 1 to 10, a very cool 1 to 10 or 1 to 8, depending on how you place your risk. 1 to 10, but personally I like it tight. So just I just give it 17 maximum stop loss. And then when we got to this first break, I was in. Then something I want to tell you guys: after taking entry, be very sure that you don't expect to see this thing being taken. Because when you see the market reaching here, it will be very bold like this particular middle point. It will be extremely blue if you're using this blue color, and you'll be concluding like, oh no, this one is going. Relax. Just place your entry and walk out of the chart. So you press entry. Place if you have a way in which you can, if you have a premium this, you just place your alert. Oh, this is replay mode, sorry. Just place your alert here that SL taken, so that you go back to the chart immediately, and when you see it wicking again like this, if you see it wicking like this and coming back, you enter again. Personally, let me tell you something. Personally, from my back test, I prefer that immediately this my high is wicked or low is wicked, I shift to 5 minutes and now get the snipest entry possible somewhere there. But I don't, of course, I don't advocate you do that. But personally, that is my preference. So sometimes don't be surprised if you see me giving you another entry with the 5 minutes entry. So that is just my preference, that when I'm wicked out and the direction is right, even if it wicks me out somewhere there, then immediately it gives me 2 double close or 15 minutes or 5 minutes. I'll be in immediately, and by no time I've already taken my profits. So personally, that is how to trade this strategy. I've talked, and now I feel like my brain is running out of glucose. So you have two options. Go with option 1 to get day intraday strategy entries. Option 2, get very quick raids of 1 hour. Shift to 5 minutes, immediately raid happens. Let's lock in. Let me give you another one in gold. The gold here before we end this thing up. There's gold 1 hour that happened sometimes back that was very juicy. Just remember that. Sometimes it pains me. Let me see if I can remember it. Can I even remember it? Where did it even happen? Yeah, this is it.
I think we should start from D1 so we can know, okay, we are going pro trend or
okay
against the trend.
It's only that now I told you my glucose is running out of left.
Also remind ourselves that if it's pro trend, we can go for 1 to 4, 5 RR. If it is against the trend, we can for just 1 trade.
Okay. See, I've been talking for the last 2 hours. What do you expect really doing? My brain is starting to lose focus, and then there are some smells coming from somewhere else. So
the kitchen.
Yeah, you are right. So we can see that this is this is a buy momentum. So possibly, if I get a trade here, it can hold to this particular level. But ideally, sanely enough, you should be expecting some pullback the following day, because if the market is heavily selling like this, you expect that it will come to some order block here in 1 hour and 15 minutes and then pull back. So you can expect to take this up to 3/4. That would be my thought process. Like if I get an entry for a buy here, as much as we are pro trend, but that momentum, it means that it has left some order block there that will need to be filled. So I can target to go up to this particular level. If I find an order block here, I'll be quick to leave. That would be my thought process because of the momentum. Because ideally this day we woke up when the momentum was extremely heavy. So when you shift to 4 hours, shifting to 4 hours, you can see that the momentum is really for sale, but we couldn't enter here because what was happening somewhere here is this was a close up, so we really don't have anything to do. The only point we could have bought is somewhere here. Are you seeing this opportunity?
Yeah,
that one was a very good option of buying, even if it maybe never gave good risk to reward, but it was there. So ideally, if this was red candle, it would have been a very nice trade. You see, sometimes when the market is really flowing.
Let's see what it did on H1.
So we shift to H1. So it is on H1 that we found an opportunity for buy. So I like this one. Let me check this one first and then I come back. Bad. Are you seeing what happened here? So this one was a liquidation and another liquidation. Nice. So are you seeing this? If you no. If this was the liquidation point, let's be more specific now, because sometimes you also need to be more specific. Where are we? Sometimes you need to be more specific, because if you don't do what I'm about to do, you'll be missing trade. Are you seeing this?
Yes.
This is where I should be placing my liquidation point. So sometimes you'll be forced to check like this. Nobody's going to do it for you. Just zoom in and zoom out. So this was the liquidation point. So now we can shift to 15 minutes. So now we can see that this is where liquidation happened. Where's my horizontal tool? This is where liquidation first happened, and then immediately we got 2 candle closure in our direction, and even with all those high probability and the hype, what happened? We got entry and stop loss immediately. Are you seeing that?
Yeah.
So the next entry was somewhere here. Stop loss here. That is why and this looks like there was some small news. Did it give you 1 to 3R? 1 to 2R. If you waited for some pullback, you never got entry. At the same time, the reason why I told, like, personally I would shift to 5 minutes is because of how much I know momentum kicks in when liquidity is taken. Look at this. I would have taken this immediately. Immediately after this raid, we see a pushback inwards and the momentum is crazy. Look at this. So with these two candles close in my direction, I would have waited for some pullback here or in the middle here. You enter again.
I like your 5 minutes.
So this was a 1 to 5. So when yeah, if you are liquidated and you see that you still have the confidence, go to 5 minutes and you're going to get entry. Unless you just want to recover politely, in Kenya, in my mother tongue, we say that we don't want many words. If you don't want many words, you can just go to 15 minutes and recover your loss. Just recover your loss. Another thing is that if you cannot shift to 5 minutes because it's very fast for you, wait for momentum inwards or momentum in and take it on the first candle. This is enough momentum to tell you that now I can go in. Stop loss just below it. Still got 1 to 3. You recovered your loss. If you wanted to flip, yes. So if you want to take in, you would have taken in. That was a very good trade. What time was it? This was at 17, which is still very young time on my time. That one I could have still looked for that opportunity. Now for the buys, this day we could not see sells in 4 hours, right? Or buys in 4 hours. This is the 4 hours. By this time of the day, were you seeing any possibility of buying here? This was the first candle of the day. This is the second candle of the day. This is the London open candle. Are you seeing any opportunity of buying here or selling? Not yet. No. What you would be doing is you would have placed your potential raiding point like that, and see that if this place is raided, and then I see a shift, I'll take a counter trend. This would still be a counter trend. The overall trend is buy trend. Is that correct? So you take a counter trade. So you don't see any opportunity here. You don't mark this, because you would only mark this if we already seen 2 candles close in buy side direction. And when 2 candles close in buy side direction, like on the daily time frame, it means the direction has shifted, and therefore you should be deleting this. What guides you is the last 2 candles of 4 hours and the last 2 candles of 1 hour. If 2 candles close in one direction, the trend has shifted. Are we together? So that somebody will now be placing this and still expecting some reaction here, yet the market had already shifted long time ago. So at this particular point, the only thing we would be having is this and this. So we are expecting that if this can get it liquidated, it can only be liquidated by the immediate candle. You cannot say that the next candle opened and liquidated this. Please, I don't expect to see such kind of things. That, oh, now this one is now liquidated, now we should get in. After the candle has already formed, you can only get liquidation from an immediate candle, not any other candle. So we shift to 1 hour because we are not seeing any opportunity. Now when you shift to 1 hour, obviously there was an immediate opportunity here. When this low was taken, there was an opportunity for buy. Obviously, we didn't just shift on 1 hour like that. We would be like this, and then you see the opportunity, and then you shift to 5 minutes. After marking that low, you shift to 5 minutes and relax, and be watching time frame. This is how real market would be. And then when we get that immediately, we are now prepared to look for double close in our direction. Let's see. Not yet, but nice. The first one. Not yet. We start afresh. the first one, and here we go the second one. If we can get a small retest on this, on 5 minutes, by the way, you won't be getting a lot of retest. So even if you take it at just at the middle somewhere here, it's still okay. 5 minutes do not retest most of the time. And then target, let's say I want to, like I said, I would have targeted I want to. You can even take it here, because this is where we are expecting the direction to come to. This would be so nice, but obviously that is flexing. It's unnecessary. You don't need to be flexing. You don't need to be flexing, surely. Here we need to take money and then leave. So imagine somebody who thinks that I can only wait for it here. Let's see. Of course they'll get the best entry and the best risk to reward, but in most occasions they would have missed the trade. Let's see. How would you feel?
And the trade left him. So much pain.
Even us who are waiting for the middle, we couldn't see it. That is why, for me personally,
that's so painful.
For me personally, on 5 minutes, I don't set limits. I just wait. If I see a reaction, I'll enter. I can assure you, I'll enter. Because not all the time you are going to get this. So sometimes you just accept and let it go. You will be the hero now, because at least your trade should have gone for a 1 to 6. So it went nearly a 1 to 6. But without you, and that would be okay. So you just be seated there wondering what happened to you. Now at the same time, if it just went out like that, you'd be waiting for this low to be taken. Just accept and move on. There's nothing wrong. So let's see. If this candle does not take it immediately. No, this is wrong taking, because when this one closed, this we delete immediately because the trend could be changing. Now this is a situation whereby you get one liquidation, but now the problem is that the momentum is still on the buy side, so it is low probability, and therefore you just avoid. So the trend has changed, so we are selling. Can see. So unfortunately, the wildfire we missed. For those people who like forcing issues, that he said that the previous candle provided it is red, we go in. In most occasions, you will be watched like no man's business. So you just stick to waiting. After this candle close, retest or this order block, you can look for it. In most occasions, the market does not come and test IFC. Those people who keep, I know who is good at this is who? Junior. You like marking order blocks. Order blocks are extremely useless in the market. The only thing that are useful is fair value. So if you are marking that this is your IFC candle, institutional funded candle, some doji inside bar. So if you are waiting for this to come and retest here, in most occasions order blocks are not tested. So you just wait for some small. So somebody took this. Now another gold doesn't retest. Yes. So for gold, I even advise you not to be waiting for retest in 5 minutes. Are we together? For gold, do not wait for retest in 5 minutes. Immediately 5 minutes close, sniff in. Because if you sniff in, look at somebody who took this. If they took this on of course this is wrong trade. Do not come and share with me such trade, because this is violation of the rules. You are taking a trade when the momentum is squarely on the bullish side on 1 hour. It would be nice to take a sell trade if this high was wicked, and then the sell kicks in. It means that now you are playing with the momentum of 4 hours. But on 15 minutes, do not even share with me such trades. As much as it looks nice and it looks very juicy, not everything that glitters is gold. Now, I feel tired, to be honest.
I think we've done enough for today, so we'll go back test and see how things unfold and get back to study.
This is exactly 2 hours of recording. So let me
I think the video will actually help us to